Hello from a rather glorious Tuesday the 30th. I'm FX Blue and this is the market brief. So Boris was on, he confirmed we remain on track and the data supports the plan to reopen most non-essential retail and hospitality venues on April the 12th. This is in a large part due to the vaccination programme where all vulnerable groups have been offered the jab and the take-up has been far better than expected. Over 30 million people have received their first jab now and nearly 3 million have had the second one. But that doesn't mean that we're out of the woods yet, certainly not on the April the 12th. Several restrictions will remain in place and at least until May the 19th, while the science nerds remain little concerned about the new variants of the virus floating around the continent and whether they'll arrive in the UK. We had an independent member of the MPC commenting, outlining his concern that the Bank of England may want to put the brakes on if we see a couple of quarters of above average growth. This goes against the approach adopted by other G7 central banks, where the wider sentiment is that until the economy can stand on its own feet, support should remain in place. So that debate will continue, no doubt. Sterling had a pretty good day as market sentiment improved over the reopening of the economy. We pulled up just shy of 138.50 against the dollar and we touched 117.60 against the euro, but we pulled back before the close. We kick off this morning from 137.70 and 117 respectively. Over in the US, it's all about non-farm payrolls. We won't have a sweepstake this month because it's a bank holiday in the UK. But forecasts are expecting around 500,000 new jobs. JP Morgan has even published a call of 650,000. Punchy stuff, but these numbers will follow a woefully low forecast last month where the data surprised to the upside. So if results are in line with expectation, the dollar could break higher, especially with the thinner trading conditions with the holiday across Europe and the UK. We've not seen any real effect of the stimulus checks yet, but confidence in the US is at record highs, and the Dow Jones saw a record close yesterday. Biden has been on. He spoke of his concern the vaccination programme could suffer a setback if supplies run low, but he's due on again tomorrow. It's a little bit more interesting tomorrow. He's expected to announce an infrastructure project valued at around $3 trillion, all to help ensure the economic recovery continues. So meanwhile, the dollar remains pretty well supported. Euro dollar fell to 117.60 yesterday, and the market seems positioned for a stellar non-farm payrolls, but that just adds to the downside risk. So the effect of disappointing data may be pretty volatile. Right, that's it from me. Have a wonderful day. Glorious sunshine today. Hope you managed to get out in it, and do join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue. Yeah.